The bad debt really could come into play when you're purchasing something that's really out of your means and you know going into it that you're not able to make those payments. Looking at your credit cards and saying, how many credit cards do I have? Oh my goodness, I'm paying 21% on this revolving balance. How can I bring that down?
Is there any general advice, anything you wish people knew or had a better handle on when it comes to either debt or just strong financial well being?
I think my advice is just having a true awareness of what your personal financial picture is and be honest with yourself. And then really looking for those tips and tricks as to how you can save money. So, like a simple loan, being able to bring down those interest rates that you're paying is a really great option. Looking at your credit cards and saying, how many credit cards do I have? Oh my goodness, I'm paying 21% on this revolving balance. How can I bring that down? So, a lot of the time, the recommendation is to call those credit card companies and have them bring your rate down. But we know that compared to a loan like one from Simple, they're not going to be able to bring those rates down to 5.75%. So being able to understand when and where it's right to consolidate, I think is some really good advice for you to sit down and take a look at.
Fantastic. One thing I also wanted to touch on here, just in terms of general financial advice, a lot of Canadians might be concerned that after a period of extremely low interest rates, would you say that there is good debt and bad debt?
Well, my mother always told me there's good debt and bad debt. I think again, it's responsible debt. So really, when you're taking on debt, you're understanding that you're able to make those minimum payments, and those minimum payments are important whether you're using a credit card product or a loan product. So making sure that you're able to make those monthly payments, and that you're taking on that debt for something that actually makes sense for you. I think the bad debt really could come into play when you're purchasing something that's really out of your means and you know going into it that you're not able to make those payments. So make those decisions where you know that you're able to make those monthly payments. And that's something that we do when people take on the loan. It's very clear what their monthly payments are. They're able to play around with the terms so they can have a weekly, biweekly, or monthly payment and up to 7 years term. So you can see the flexibility and the different amounts that you'd be required to pay from a loan from 5,000 up to 50,000. So we're really helping to make sure you're making your own personal best decision, but on our side from an analytical perspective, making sure you're also able to pay that back.
I think a lot of folks who might not have a full picture of their sort of debt situation in their minds, perhaps, the amount that they owe is the amount that they owe. Debt is debt, and it's just a matter of paying it back as quickly as possible. But perhaps they're not looking at a way of paying less through changing providers or for taking a loan. So the idea of taking a loan to pay off debt might be a foreign concept to some people because it seems like you're just trading one, sort of debt for another. What advice do you have for folks that, in terms of taking on more debt to get out of debt?
It's a great question, Jared, and I can understand the hesitancy that people have. I would, though, share that one of our number one reasons for customers coming to Simple is for debt consolidation. And that really is because of our low rates. So if they're finding that they're paying 20+% on another product, we help them pay off that other product with the loan. So we can pay off that product at the 20%. They're having the same amount of debt, but at 5.75% up to 19%, they're paying significantly less every month and they're able to pay off that loan faster. So really when you write those numbers down, it's a no-brainer for consumers.
Fantastic. I also wanted to ask, being an online provider, a lot of Canadians still have financial habits and strategies that might be a little bit out of date. And, they're sort of set in their ways as the way things have always been done. But given the rapid pace of innovation in this space, what are some of the newer tools and resources that folks should consider in improving their, financial habits, products and services of all kinds that they might not be aware exist that can make their lives easier?
I think there's a couple of things. One is taking a full glance at all of the money coming in as well as the money coming out, and in addition to your outstanding debts, and taking a look at that and saying, okay, which ones can I pay off? And is there a way for me to pay off those debts faster? I think another way is really understanding your credit score. A lot of people don't know what their credit score is, and it's your credit score that actually gets you access to better rates and opportunities from a borrowing perspective.
Fantastic. What advice do you have for folks whose New Year's resolution was to improve their credit score?
Like I said, really understanding what your full financial picture is. So it might be a bit awkward. It might be difficult that you got to pull out that paper and sort of see what your full financial picture looks like. Don't be afraid. Symple really feels, given our timing coming into the market, that we're going to be able to help Canadians get ahead.